The stock market was on a seemingly upward rise all year long in 2025, but in recent weeks, well, I shouldn't say all year long, there was that huge pullback after President Donald Trump announced the increase in tariffs in early April. But despite those, if you exclude those, the stock market has been in rally mode almost all year. But in the last week or so, it's been a bit of a pullback. So investors are now trying to position themselves with a few more defensive stocks. And I've got one I'm going to talk about here with Lockheed Martin. I'm going to share with you the latest developments on what's going on with Lockheed Martin stock, share with you my proprietary discounted cash flow valuation, which calculates a fair value for this business, update my buy or sell recommendation in the end. So, with all that to discuss in a relatively short video, let's jump in and get right into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So, Lockheed Martin's management team said that during the quarter, they took a number of charges to address new identified risks and prepare the company to focus on the growth opportunity ahead. In the press release for its most recent quarter, they reported $18 billion in sales, invested $800 million in infrastructure and innovation, and returned $1.3 billion to shareholders in the second quarter. Those charges the company talked about also included $1.8 billion across several legacy programs as a result of the review process they analyzed earlier. The company dedicated to both supporting customers and their national defense priorities while striving to maintain their contractual commitments in an economically viable way on behalf of shareholders. And that's an interesting element of investing in Lockheed Martin stock. Most of its business, most of the products they're making today is for orders they received several years ago. Lockheed Martin has a strong backlog of billions of dollars of orders, and customers are waiting to receive those products. But the interesting thing about this is sometimes the company makes contractual commitments to fulfill these orders at a certain price. But then when it comes time to manufacture those products for delivery, the cost to deliver those goods is often higher than Lockheed Martin anticipated when they made the quote to sell those items. Sometimes in the contracts, there are some flexibility arrangements included where if the cost of goods are higher by a certain percent, Lockheed Martin can go back to the buyer, usually the US government, and say, look, we're going to invoke the higher price because cost of goods have increased and cost of goods have substantially increased over the previous 5 years. So the cost of making these products have increased substantially for Lockheed Martin, while the orders they have been in place for several years. So they take these financial charges very seriously and they're doubling their focus on program management and performance on their existing contracts. They also want to ensure that all future contracts more robustly assess and account for future program and technical risk. So they are now adjusting for the fact that cost could increase meaningfully. Remember, before this recent bout of inflation in the United States, we haven't really had inflation since the 1980s. So companies like Lockheed Martin were mostly automatically or robotically just penciling in 1.5% inflation or 2% inflation on an annualized basis moving forward. But since the previous 5 years, we've had two different rounds of inflation. First, we had the inflation from the economic reopening and all of the government stimulus that went out as a result of the pandemic. And now we're experiencing inflation as a result of the tariffs implemented in early April. So you've had two different bouts of inflation, and now companies have to start to account for the inflation risk moving ahead. By the way, this document I'm reading from is Lockheed Martin's Q2 2025 earnings call with Wall Street analyst. I've made this document available for all my channel members, and you can join for less than $5 a month. See the link in the description for all the benefits you get for joining our channel. This is only one of all the benefits. So starting with the company's Turkish utility helicopter program and the Canadian helicopter program, they are now adjusting for these various changes. For this program, they reached a notional agreement to restructure, including the charge of a change of scope of work due to the impacts of U.S. government sanctions on Turkish entities and persons involved in that program. Additionally, for the CMHP, they are focused on providing additional mission capabilities, enhancing logistical support, and extending the fleet's life while they continue discussions to potentially restructure certain contractual terms. And these are lucrative contracts as well, not only in delivering the items like helicopters that we talked about earlier, but also servicing these helicopters, servicing these programs are often even more lucrative than delivering the physical product itself. The company is also working on a highly classified program that can only be described as a game changing capability for their joint US and international customers. It is critical that it be successfully fielded. With their enhanced oversight over this program and rapid incorporations of lessons learned, they expect to continue to reduce risk over the next few years as they move through the key milestones of this very advanced system. Lockheed Martin also noted that its capabilities were at the center of recent U.S. military operations in the Middle East, reinforcing the company's essential role to American and allied national security. Pilots flying the F-35 Lightning II and F-22 Raptor stealth fighters led the operation, providing the air dominance and defense suppression required for the bombers to reach Iran's hardened nuclear sites. And you probably read about this when the United States supported Israeli attacks on Iran and the United States sent bombers to bomb Iran's nuclear facilities. Lockheed Martin's F-35 and F-22 led the way, clearing the errors for bombers to reach these nuclear sites. And these capabilities are so critical that Lockheed Martin can command significant prices for these products and command orders spanning several years and continued commitment from the U.S. government because of how essential these are to the United States security, to how essential these are to the United States military. And that's one of the reasons why investors are attracted to Lockheed Martin stock, not because of the specific military capabilities, but because of the essentiality of the company and how the excuse me, because of how critical the company's products are in that during good times and bad times, the United States government needs Lockheed Martin's products. And that's good news for investors because that leads to a lower risk profile. And that lower risk is one of the main reasons that makes Lockheed Martin an attractive stock. The company's beta, which measures risk, I've adjusted higher because it's so low that I felt like the historical numbers don't include some potential risk in the future, like the risk of not being able to effectively manufacture these products or some other supply chain snag that really hurts the company, et cetera, because they haven't had any big issues and the stock price has not been volatile in the past. The beta is very, very low. So I updated by multiplying it by 1.75, and it still comes out to a beta of just 0.4725, which is less than half of the riskiness of the average stock in the S&P 500. So the intrinsic value per share I calculated for Lockheed Martin, $736. Current market price is $447. So I see this business as being undervalued when I measure by my DCF model. Furthermore, when I go to fiscal.ai, which is my preferred data source, and I view the forward price to earnings ratio at just 16.3, the stock also looks undervalued on this metric. So overall, I will update my recommendation of Lockheed Martin stock. I've had this stock rated as a buy all year long, and I'll update that recommendation here today, reiterating that I think this stock is a buy at current market prices. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.